U.S. natural gas futures fell below $6.10 on Thursday, after the EIA report showed a bigger-than-expected storage build. U.S. utilities added 107 billion cubic feet of gas to storage during the week ended October 28, more than market expectations of a 97 billion cubic feet build. It compares with an increase of 66 billion cubic feet in the same week last year and a 5-year average increase of 45 billion cubic feet. Adding to the bearish tone, temperatures are set to remain mild over the next 2 weeks, curbing demand for cooling and allowing utilities to keep injecting gas into storage for the winter. Dutch front-month gas futures rose to above €135 per megawatt-hour on Thursday, the highest in 3 weeks, buoyed by concerns about LNG flows from the U.S. amid a restart delay from the Freeport LNG plant in Texas. Still, European natural gas prices remain well below their summer peak of €339, prompted by milder-than-usual weather, likely to hold until mid-November, reduced gas consumption and strong storage build. Despite the relief, for now, there is still a risk when temperatures start to fall. Looking ahead, concerns start to increase about reserves for next year as Russian gas flows via the Nord Stream 1 remained at zero and there is the possibility remaining flows via Ukraine and Turkstream are halted. At the same time, there are constraints to how much more LNG Europe can import, and global competition for LNG could also attract cargoes to other markets. Forecasts calling for lower demand over the next 2 weeks have been capping gains. With the weather expected to remain mild through at least mid-November, utilities should be able to keep adding gas into storage for a few weeks beyond the usual October 31 end of the injection season. However, overnight models suggested that earlier forecasts may be changing. Price volatility has been ramped up this week as there is a tug-of-war happening in bullish and bearish drivers in the market. Rapid price changes in recent weeks have boosted the contract's 30-day implied volatility index to its highest level since October 2021 for the second day in a row. The market uses implied volatility to estimate likely price changes in the future. Looking ahead, there is upward pressure on prices thanks to expectations of colder weather in mid to late November and a rebound in LNG exports that should boost demand, as output is falling from record levels.